dedica precisamente a publicar estos datos. Hablamos con el economista jefe de S&P Global Market Intelligence, es Chris Williamson. Chris, hello, good afternoon. Thank you so much for attending us.
Good afternoon.
So we have just met the US PMI for the month of May. Could you tell us how are you seeing the US manufacturing sector?
So the manufacturing sector is struggling at the moment. It has been for a couple of months now. The second quarter as a whole is so far looking like it's the worst manufacturing performance we've had for 2 years. So that goes back to the first lockdowns during the pandemic. We've seen a big loss of momentum. The sector started the year reasonably well, but the growth has faded. In fact, it looks like manufacturing could act as a drag on eurozone GDP in the second quarter at the moment. So the results are quite negative. If we're in contraction, it's only very modest at the moment. But there are a number of headwinds that manufacturers are facing at the moment, most of which are very obvious. So we still have supply delays, shortages of many inputs affecting huge areas of manufacturing. It's not just car manufacturers and the semiconductors. There's across the board shortages of various components affecting industry. Aligned with those shortages are, of course, soaring prices, so manufacturing costs have increased dramatically and continue to do so. In fact, May saw one of the biggest jumps in manufacturers' costs that we've ever seen with the survey. So we've had record after record in recent months of cost increases. So supply constraints, cost increases, but also, of course, what we're seeing is as the economy opens up from the travel restrictions associated with the pandemic, households in particular are moving their spending away from goods to services. So especially manufacturers of household goods are seeing reduced demand. In fact, it fell for the first time in 2 years in May, demand for orders for consumer goods. So we've got these headwinds, and they've been going on for some time now, especially the shortages and the price rises. But of course, they've been exacerbated in the last couple of months by the Ukraine war and China's lockdowns. So those two factors have been the real key causes of what caused manufacturing to go from sluggish growth to stalled, if not contraction, in the second quarter.
This is a similar view that we are reading today in the Eurozone PMI's data. European manufacturing activity continues to increase in May, but at a slower pace compared to the previous months as well. How should we understand the final data today for the Eurozone?
So very similar. Yeah. So headwinds of China's lockdowns impacting global supply chains, as well as price hikes across the board. So the Eurozone's got a special problem with energy, of course. That's meaning it's faring worse than the US at the moment. So energy prices really eating the cost of living, and that's causing a big pullback in demand for goods in particular. Alas, spending on services is holding up well. So you do still have this tailwind of the opening up of the economy, boosting services, and that's what's keeping the whole economy growing at the moment. If you didn't have that lift, especially for consumer services, we'd be looking at a downturn. But at the moment, the second quarter, we should see growth thanks to those consumer services offsetting some of the malaise we've got in manufacturing at the moment.
As you said before, demand is shifting towards services, and consumers have increased their spending on activities such as leisure and tourism and are spending less on goods. How could this evolve?
Well, one of the concerns is, of course, that this rebound in consumer services activity won't last forever. By nature, any rebound is temporary. There is pent-up demand from the pandemic as people have not been able to travel and go on holiday. And this is what we're seeing at the moment. This should support growth through the summer. It is being that pent-up demand is being eroded, of course, by the rising cost of living. So the strength of the rebound that we were anticipating maybe a year ago is diminished because of that inflationary hike that we've got in the cost of living. So a little bit less momentum than previously thought. And there's big question marks over how long this will last for, especially if you get inflation remaining persistent, if you get interest rate hikes from central banks such as the ECB, and just what that does to consumer and business confidence is a big uncertainty. So at the moment, we should enjoy the rebound and hope it keeps us growing in the euro area for the next 6 months or so. But after that, the picture remains much more uncertain.
And how did you see this dependence on the services sector for economic growth?
Well, that's it. Everything depends on that service sector driving growth at the moment. So a huge dependency on the service sector. One thing to bear in mind, though, is the broader global picture. So manufacturing at the moment, whether it's in the US, Eurozone, or indeed much of Asia, is being hit by this ongoing supply chain delays. And that is largely a function of China's decision to pursue its zero COVID policy. So the China data that we produce with Taishin, the PMI for China, that's shown 3 consecutive months of very steep downturns. In fact, the downturn that we've had in Chinese manufacturing in the last few months has been deeper than in the initial part of the pandemic. So that's one of the things that's really causing issues globally now. But we've already heard that Shanghai is starting to reopen. And we've seen from countries such as the European nations and the US how you can get a very nice, strong recovery as these economies open up again. So this is what we should hopefully see in China. We should see it continuing to open up. That will help boost growth in China. It will also help alleviate a lot of the global supply chain issues. So that will take some of the pressure off the service sector as being the main driver of growth. And hopefully we might get a more balanced picture going forward of manufacturers being able to ramp up production and join in the recovery.
And finally, I'd like to ask you about Spain. Manufacturing activity here in Spain rebounded in May, but it's not clear if there are away the shadows of stagflation. Do you think stagflation is a real threat to the Spanish economy?
I think it is. Spain seems to be performing better in manufacturing terms than the other major Eurozone countries. Its output index for manufacturing was a little bit higher, so better growth than other countries. Italy, for example, fell into decline for the first time in 2 years. Germany is enduring its worst period in the last couple of months for 2 years, likewise France. But Spain, it lifted higher. And what we saw there was some alleviation of supply constraints, yet still lots of problems with shortages, but it's showing signs of picking up somewhat. Now, at the same time, this rebound that we talk about in terms of consumer services activity, travel, tourism, now Spain's well placed to benefit from that. So while there is a stagflationary threat across the Eurozone, Spain perhaps is one country where that risk is less than in other nations.
Okay, so thank you so much, Chris Williamson from S&P Global. Thank you so much for joining us. Have a nice day.
Thank you.